This is Rod Kusin Spooman for Risk on January 21st, 2010. All times on the chart are Central Standard Time. And we're going to actually cut a couple of videos today, so watch for a second one. We had some fantastic things happen with the premium today, as well as gap data. But the subject of our first video is actually going to focus our attention on the use of the bands and our group reversal system. Now, what we have on this chart is what we refer to as an adaptive price zone. An adaptive price zone. And it works fairly simply. It's a bit like a Bollinger Band. But here's the idea. You have two inner bands and two outer bands. The intent here is to take trades when the Spoos move outside the inner band, but not beyond the outer band. So, for example, right in here you see Spoos went all the way to the outer band. That usually indicates that the Spoos will move lower. The intent then is to find an opportunity to pull a long trade when you're in the lower band and hold that trade until you get into the upper band. Short the upper band and hold it until you get into the lower band. That's the concept. Now we're plotting this particular chart using a 6,000 tick bar ES chart. That's how we accomplish the size of this band. If we used a different tick bar, of course the band size would be different. But in this case, 6,000 is what we're using. Now let's look at some of the issues with trying to trade this manually. If you were to do so using a 6,000 tick bar, let's suppose you used a stochastic. If you used a stochastic and you tried to get in on this low here, the stochastic hasn't turned until the market closes at 1113.75. The low was at 11.50. So you've left a little bit of money on the table to try to take advantage of this. Okay? And the market has continued to come back and test that level on you. If you try to get in at a lower low, which is what we find over here, slightly lower. Okay, this was 11.50. This is down at 11.10.75. It doesn't actually turn to the point that you really noticed it until this bar here. And it opens at 11.13. So almost over 2 points left on the table. Trying to exit the trade once it crosses, the fast line crosses below the slow line, you're down at 11.17, whereas the high was at 11.19.50. Now it still works, okay, still works, but we want to improve on that. So here's what we do. We tell our strategy to simulate this particular adaptive price zone. We're not actually going to plot it, we're just going to simulate it, in the sense that the strategy knows when the Spoos have dropped below the band or above the band. Strategy knows that. And then we're going to combine that with our group reversal system to know more precisely when to take a trade. So We're going to now move to a different chart. Notice the vertical line here. This is where we've just dropped below the adaptive price zone. And let's take a look at where this shows up on one of our group reversal charts. Now we've gone from a 6,000 tick bar down to a 300 tick bar. And look at the reversal here. We drop a little bit lower. We move from a dark green colored bar here to magenta and back to dark green again. Now, if you want to know what the significance of these colors are, go to our website, RSKsys.com. Go to the section on group reversals, study that page, and you'll understand what we're doing here. This is a group reversal. So right on this next bar, right here, right at the low, you have a long trade. Precise as you can get. So there's your long, right here. Now if we had our strategy set up here, you'd see a long signal right at that point. And on this chart you see where we do have a strategy running, the trade signals that happen in this particular routine just a couple of ticks away from that specific low. But we automatically issue trade signals depending on where we have the strategy set up. Now, was there anything else that was happening at this particular moment that further confirmed a long trade? Okay, again, we'll line up our bar right there. And yes, there is. Right in here, okay, again, 1044, this is our divergence chart. And it's telling us right here we have divergence on the VIX as well as on the ES. And we have gaps preceding divergence. That particular pattern is frequently seen near significant pivots in the market. So we had the adaptive price zone. We had our group reversal. We have divergence. And all of that is happening at the same time. Perfect. Now, as it turns out, however, even though the market does rally up quite nicely, it does come back and tests the low. And here we have the low of the day. And right in at this low, once again, you see gaps preceding divergence, and you've got divergence everywhere. You got it on the VIX, you got it on the ES, you've got it on the ADS-PD. All of these different colors are confirming that. So another opportunity to take a long trade. And then we don't become divergent again until way up here, right at the top of the move. There's the divergence. Down here and up here, precisely where the divergence occurs and precisely where the market turns. And we don't see anything in the way of divergence again until we get right back down here. That's how precise we are. So we welcome you at our website, RSKsys.com, pardon me. Come and ask for a demo. We'll show you what we're doing. And by all means, we can improve your trading results. This is Rod Kusin, Spooman for Risk.